Hey, we just got a brand new email. We just got some mail from Home Depot Hank. We have covered his DD before, but he has now provided the most comprehensive Iliad of GME technical analysis and DD. If you guys like watching the markets, I'm live every single morning, and that's why I want to be able to say, hey, throw some scissors in the chat. Live stream, how's it going? Make some noise. We got almost 4,000 people in here and 600 likes. Guys, smashing that like button, smashing that subscribe button, and making sure that we can get this out to as many members of the Moon Platoon who haven't quite yet gotten the sleepies out of their eye. It's 6 a.m. over here on the West Coast, and we are going to begin and jump right in. So watch until the end, because this is going to cover essentially all of the composite technical analyses that we need to understand for GME, and we're going to be tracking GME live right here in the top right corner, and the top left corner is always reserved for our brothers in arms, AMC. So here we go. Apes, gorillas, people, other people, and degenerates gather round. Uncle Hank has some technical DD to bestow upon your smooth brains. Please bowl with me, because this will be long. Some of you have probably seen my other posts, and this will be much the same. However, this technical analysis will be much more in depth and will cover a wider range of indicators than previous posts, and that is just gonna make me so excited. We are all here for the data. Data is king, do not forget. So this is not financial advice. Obviously, they're a technical trader, and there are indicators they've used in the past that are helpful. However, they are not exhaustive, and there are many other indicators and trading styles that are just as useful as these. They're not a financial advisor. This is not financial advice. Their brain is literally a senile amoeba, and as you can probably tell, they have ADHD medicine prescription. Worked very hard on this, and hope you apes enjoy it. Black Bear, thank you so much for the data. Woo, 4.5 mil borrowed. Sheesh. Okay, volume catalysts. Look at this pretty picture. I put volume here first because it is by far the most important indicator for a stock. Let's especially look at GME here. That's why on my charts, I'm always looking at volume right here, and the orange line is the volumetric weighted average price, the VWAP. If you guys want to see the dedicated video just for that VWAP, I talk about exactly how important it is there. Volume is God. If you look at GME's chart, every single giant price increase was preceded by a large influx of volume. This is not unique to GME. We are here to just learn about stocks generally. So if you guys wanted to be able to understand which indicators are so important, volume first. Volume is king. This is requires a massive amount of volume for a massive increase in price. Let's check it out one more time. We have the bar chart here indicating how much volume there is. Each time we see a green circled amount of volume, we are then cause a massive price change. And this is a causation effect, right? Massive change in volume, massive change in price. Understand, oh boy. Understand that volume is the only thing that will make this stock spike, as with any stock. The stock is not going to magically go to the moon without a ton of people on the buy side. Again, this is not exclusive to GME. When a stock has great earnings report, acquisition news, FDA approval, etc., you will see massive volume spike that leads to a massive increase or decrease in price. Now you're probably thinking to yourself, okay, Uncle Hank, but my tiny ape brain can't comprehend what makes volume increase. Well, volume is simply the number of people buying or selling the stock. Simple as that. If you guys are just joining us, we are talking about the indicators that you should look at, the Iliad of GME technical analysis. Okay, what makes more people buy or sell a stock? Catalysts. We have seen that the GME is especially sensitive to catalysts. We believe that this is because Wall Street bets retail investors own a large portion of GME's float, and we have seen that float percentage calculated before in previous DD. So that guarantees that there are a stable number of holds. So when there is news, demand spikes while supply is still low. They are now going to go over the past catalysts that made GME spike, so you can get an idea of this. First, here is a pic of GME's volume since January. They call it angsty teenage boy's hair because it is spiky. And we can see right here, even without an x-axis, the activity here in January. Let's see, all the way back in January, right? So yes, since January. So all the way back in January, absolutely nothing in February for a long time while we hodled around 40, and now in March. The very first spike in GME's volume is in November when our Lord and Daddy Ryan Cohen announced his stake in GME. This isn't pictured here because it isn't significant compared to the volume from the past few months. I think at this point, most people thought Cohen was on DMT when he hit the buy button for GME. The first big spike on here is in early January, which is when Ryan Cohen announced as being a member of the board. This is when people were like, okay, maybe he wasn't, but he, was definitely in something. In the next few days, we see volume decline, but still elevate compared to previous levels because of increased media attention. And this is truly, perception is king, right? This truly is perception is king. Let's keep the chat moving here. Let's get some diamond hands in the chat. If you guys have hodl, because you remember, bring it in the chat as well. We want to see some action here. The next jump, which was very red, was when our special needs friend Andrew Left announced his short position, and which subsequently led to Wall Street Bets, calling him out on the internet. This is where things really started to kick off. After this, there was a giant amount of volume for days because of Elon tweets. Shamath support, Papa Pali, and Mark Cuban talking to us, media coverage, and the revelation that GME was shorted over 100%, right? This is this story. If you guys had not yet followed up and be like, well, I just jumped on in February, maybe I just jumped on in March, and I'm not exactly sure what's going on. This is essentially the history books. You guys are watching the documentary of GME unfold before your eyes in this post. This was the frenzy of late January. After that, everything died down regarding volume, price, and media attention. However, the volume picked back up and price corresponded when GME ousted their CFO. They really did. That was back when our second shot was given to us. Oh, praise be GME, God be good. Most people thought that Cohen had something to do with this. Full disclosure, I thought that GME was done when it tanked the first time, and this showed me its true power. Give us some rocks in the chat. Rockets in the chat if you thought the GME was done the very first time around, but you still held. We then see one more volume spike when it was announced that Cohen was being appointed as the head of the board that would change GME to a digital company. Since then, volume has gone down. The following charts show GME's volume and price in each of the past few months, so you can get an idea of how crucial volume is. So we have GME's volume and its price. So this is a little bit difficult to understand because there are no other axes other than price and volume, okay? So a couple of charts there. Now you understand that volume is king and the only thing that will move GME. When people talk about X will move GME, they're saying that the event will create positive volume, which will allow GME to rise, right? We're just skipping a couple of steps when we mention one and then the other. So what are the potential catalysts we have in the future for this volume rise? Earnings is obviously the closest one. The actual numbers don't really matter here. If GME beats significantly, means beats expectation or is better than we expected, it might cause a rise. But the real thing we're looking for is the conference call, which I'm going to be live streaming likely with all of the hodlmen together. If GME appoints, hold on a second. A conference call. On the conference call, if we hear news about digital transformation, acquisitions, or a new CFO, or anything relating to Cohen, there will be a massive volume and price increase. If those things are not discussed on the earnings call, then there will be catalysts in the next few months. If GME appoints a new CFO, they believe that catalysts will significantly drive it up, as we saw the price 4x in a few days when they merely announced that they ousted the old one. If Cohen gets appointed CEO, oh, get ready. So now you understand that volume is king, and all this talk of the squeeze might happen here, or the chart might makes it look like the squeeze is coming, are irrelevant if they don't coincide with an event that will significantly drive up volume. Number one of the four indicator men of the apocalypse is volume, and we've just figured that out. Okay, so I'm gonna go through the chat real quick. I'm Boston Man is having a hard day with mental health. Hey, we are here. We are happy. We are go lucky, and we are supporting you. So once more, if you guys can just put a smile on his face, drop some puppies and bones in the chat for I'm Boston. But Uncle Hank, what can you tell us about volume when they haven't been giant spikes? Glad you asked. That's where OBV comes into play, ladies and gentlemen. OBV, on balance volume, is a volume indicator that was founded on the idea that volume precedes price. Keep that idea in the back of your head. For those of you who didn't finish third grade, precedes means comes before. OBV is a running total of positive or negative volume that depends on price of that calculation. In this calculation, the volume of a candle is either added or subtracted to the OBV total, which is denoted by a line, depending on if it's negative or positive. This is an oversimplification, but just know that it is a running total. If a candle is neutral, the volume of that candle will not be added. Thankfully, GME rarely has neutral candles because it's so volatile. If it's positive, the volume is added to the total. If it's negative, the volume is subtracted from the total. For example, right? Pay attention right now. If I've lost you, pay attention. There's examples here. So let's say a given stock, the OBV is 1,000. Then there are a negative candle with a volume of 2. The OBV will now be 998. Then there will be a positive candle with a volume of 100. The OBV will now be 1098. That is why OBV is shown as a line rather than a candles like volume. OBV is a trend indicator. Remember, volume precedes. Now he misspelled precedes price. So the actual value of OBV is largely insignificant. Rather, the trend of OBV is what matters. Because volumes precedes price, OBV allows you to predict where a stock will go, because if OBV is increasing, well, it means that there is going to be a lot of volume in green candles and less volume in red candles. In my opinion, OBV is the best used to predict when a stock is going when it's consolidating. And oh, would you look at that? GME is consolidating, baby. If a stock is consolidating and OBV is increasing, that is an indication that when it breaks the trend, it will be high. The opposite would be true if OBV was decreasing. Generally, if a stock is increasing in price and OBV is increasing, you can expect it to continue that trend. If the price is increasing but OBV is decreasing, you can expect it to go negative in the future. Essentially just a Nostradamus of indicators. This is all goes back to the idea that volume precedes price. The below picture is GME's OBV, the yellow line on different time scales. So in a year, OBV is starting to fly. 90-day, OBV is going from low down up to higher. And 30-day, still looking like it's flying. And even on the 10-day, looking like it is ripping up in the sky. So what does this mean? Well, gonna have to take this from my other post because I think I explained it well. The commonality between these graphs is that OBV continues to increase. If you look at the 1 year and 90-day charts, you can see that OBV took a very small hit. Baby hit when GME collapsed after the January squeeze. However, OBV has continually increased in value since then and is currently higher than it was in January. This means that the green candles, the uptrends, have higher volume than the red candles, the downtrends. This is extremely bullish, right? Bullish is just looking good for that stock. We can also see that although volume may be decreasing in the 30-day and 10-day charts, OBV is still increasing, which means that there is much more volume on the buy side than the sell side, guys. We are focusing up on the most important technical indicators for GME and AMC, and in order to get over that 1,000 like hurdle, we need to get more likes on this video. So thank you in advance for that. Which means that there, even with all of these monster short attacks like the one we saw last week, there's still a net positive uptrend in OBV, which further adds to the bullish sentiment. Personally, they think that this is partially because of a continued retail interest, but more importantly, they think that it's going to be adding credence to the theory that we have an institutional ally, these long whales that we talked about in the past, or allies that continually buy GME and are trying to initiate the squeeze. This takes away credence from the idea that hedge funds are just manipulating the price up and down for their own benefit. Furthermore, many people also believe that AMC and GME are correlated, which we have actually already seen. Though this may be true to an extent, they move similarly but not identically. OBV is much more bullish for GME. And let's go over here. Much more bullish for GME. AMC's OBV is increasing similarly to GME's, but it's not higher than it was in January like GME currently is. AMC's OBV dropped significantly after January and has not returned to those January levels yet. As stated above, GME is and has been above its January OBV levels for a while now. This is not to bash AMC. right? They are very bullish, and AMC, they have a position, as do I, in both AMC and GME. All this is showing is that GME is having the greater bullish momentum by one of these indicators, okay, by the OBV. And the stocks are not perfectly correlated like many people think. The massive OBV of GME also suggests that it will be relatively easy for it to have a rapid parabolic upward move, right? We're looking for that one. We're looking for the squeeze here. So now that you understand volume is king, we need volume for GME to increase. Volume is not increasing, but OBV is still increasing. This is good. This is good, guys. We like the news. Positive news means scissors in the chat. We've cutting out those paper hands. We see in the morning that AMC has now reached a new low of $12.46, coming off of it right now, being rebounded, and GME is now just hovering over its new low of 196.21. It's just paper hands who have gotten impatient. Paper-handed port noise. Scissors in the chat for them. Many of you have probably seen the news of SPY and VIX, that GME has a disgustingly negative beta between -2, -8, -13. We've already talked about how beta may not be as important, but let's see what Home Depot Hank has to say. Beta essentially is the factor of how the stock follows the market. A beta of 1 would mean that the stock follows the market. If the market is up, it is up proportionally. A negative beta, however, means the opposite. It means that the stock essentially doesn't follow the market and goes in the opposite direction. You guys know this. If you've seen some other DDs, you can find comments from people with economics and financial degrees saying that how rare a beta that negative is. There are tons of other DDs from Bloomberg terminals and other stuff that demonstrate this negative beta. Just know that GME doesn't like to follow the market. And remember, we've already talked about how this is a outlier. We see this negative data. We see that GME doesn't follow by the rules because of this one time GME put a big green crayon and then a big red crayon in January. It looks like it doesn't color inside the lines. Well, it's because of that one darn time. So there you go. So let's see. We have, though the correlation is not perfect. Hold on a sec. Where did I just say? Oh yeah, there's tons of other DDs with info on Bloomberg terminals and other stuff that demonstrate this negative beta. Just know that it means GME doesn't like to follow the market, okay? Though the correlation is not perfect, you can see that the GME is inversely related to SPY and positively related to VIX. This makes sense because VIX spikes usually happen during market turbulence, high volume, and volatility, which is exactly what GME needs. Lucky for us, SPY is pretty overbought right now. The effects of the stimmies have already pushed the price in on SPY, and I believe that funds are going to be continue to short the 10-year bond, which will push the stock market down. Essentially, the market is overbought, which means it needs to pull back, is overinflated, and will soon have to factor in the looming threat of inflation. Again, volume is more important than this, but this is just something good to keep in line. So we have right here, we have the SPY, and the SPY and the VIX are the purple lines. First one is VIX, second is SPY. Pretty hard to see right here, but just know how GME pushes against that trend. And once again, this is Home Depot Hank's DD. He sent that to me earlier, like 12 hours ago through email. Today, we're only covering some DD based on people who wanted to send them directly. We have Taha Zach's coming in a second, and we also have Dominic's counter DD against the DTCC and Hey It's Pixels DD from earlier. In this section, they're going to give brief overview of support and resistance lines that we have developed. Again, sorry for all the lines. I'm a technical trader that was raised in a crayon factory, so they cannot help themselves. The first thing I look at is the fat orange line. This line was resistance for GME when it had its second pop for the end of February. We have now since broken that resistance, and as many of you know, the previous resistance usually acts as future support in uptrends, and this is violently true for GME. You guys remember this. We've talked about this in the greater live streams of the Angela Money channel. That fat orange line has withstood several short attacks and has literally bounced right back up since then. Is this because of psychological levels? Is it a whale doing that on purpose? Is it the hedgies playing games? It's impossible to know. Just know that the support is stronger than my wife's boyfriend's hatred of me. The fat yellow line on the bottom is essentially our doomsday level of support, right? You have to see right here that if there was anything higher than that line, that is something to be majorly concerned about. Drink some water here. Let's not talk about that and hope we never get there. The fat green line just before the massive short attack, getting above there. Oh, sorry, the fat green, yellow, and red lines on top of our god levels of resistance. We had a bull trap on the top green line just before the massive short attacks. Getting above in these levels is extremely crucial as they will be strong support. So once you guys know, we've done these technical analyses before, and right after this, I'm going to be able to look at this and track that with my chart, okay? Current patterns. So look at these current patterns. Looking at this chart, we can see that patterns forming, almost all of them are bullish. First, you've probably seen millions of posts about cups and handles. Yeah, we've been talking about them. You can 100% see that pattern forming and believe its merit. Since there are so many posts on it, I won't waste your time with a picture. The first pattern that we see is a giant triangle pattern from the 513 high with the support slightly below 100. So let's look at this red line here, 513. And the support, this is back in January, the support level slightly below 100 right here. This is signified by the fat yellow line on the bottom and the skinny diagonal yellow line right there. So we draw a line here, we draw a red line here, and then we draw this diagonal yellow line down into the this is the March squeeze here. As we can see, we broke that pattern. As you can see, we broke that pattern in a bullish way and used the resistance from that 180-ish as our current ironclad support. From there, they saw a bullish pennant pattern, the two orange lines here. If you guys haven't yet seen a pennant pattern here, we have one right there. However, as many of you know, this pattern didn't play out as we kept testing that 180 support. Instead of forming a pennant, I believe we have now formed another bullish triangle pattern. You see right here. This current triangle is using our 180 support level, and it seems like it's trying to break the pattern in a bullish way. Now, why are these patterns bullish? When a stock makes a move upward or downward, then consolidates, it typically continues that pattern. Here's an example of that. We're going to learn with pictures, guys. 5,000 of you and only 1,000 likes. Something doesn't make sense. Let's smash that like button, guys. Let's get this video up there, because if we can get all 5,000 of you to click like, right, someone's going to buy another 100 shares of GME. Descending triangle here is a bullish descending triangle to an uptrend. Sorry, you guys can already see that perfectly. So we have here, we have impulse 1, and that correlates down upwards to an impulse 2. However, a bearish descending triangle is something that comes down from an impulse 1, and then it leads down to a lower impulse 2. All right, so this is the difference between a bullish descending triangle and bullish pennant and a bearish descending triangle or a bearish pennant here. Okay, just depends on where the left side is coming from. As you can see, the graph of the left applies to us as we are currently consolidating from an uptrend. This is consistent with Elliott wave theory, guys. We love Elliott wave theory here. If you don't know what it is, it's basically the idea that stocks move in a repeating fractal pattern that is categorized by periods of trending movements, consolidating movements, and corrective movements. GME is currently in a consolidating movement. Let's see, preceding a trending movement. This is bullish. They don't want to explain, Elliott wave theory. We've already done, so go ahead and watch that video there. It's the one that says 10K is only a pit stop, Elliott wave theory. So I encourage you guys to look at other posts about that. Miles Dodd, what's going on? Is this sell-off market manipulation? I'm going to talk about that in a hot second, but GME is reaching a brand new low of 189 just a few minutes ago. So with all of that understood, it appears that GME keeps forming triangle patterns and keeps breaking them. It is moving in a stair-step pattern where it shoots up, consolidates, then uses the previous resistance as support. This is extremely bullish right there. So we like the stock, and we like how this is showing every indicator of a positive sign upward. And then finally, of course, you guys can't let our boys TTM squeeze, MACD, and the Ichimoku indicators out. Some of their other favorite indicators are these ones. These indicators are purely based off of price and are trend momentum indicators. TTM squeeze has to deal with the relationship between the Bollinger Bands and the Keltner channels. It moves similarly to MACD, which also predicts momentum. Ichimoku makes clouds based off of previous price action and helps to indicate trends. All of these explanations were extremely general, so do your own research on your own to better understand them. Importantly, all of these indicators show bullish momentum for GME. Below, they have combined the TTM squeeze and MACD indicators because that's how he uses them. On the 1 week chart, TTM and MACD indicators are extremely bullish right there. That's TTM squeeze. The MACD is opening wider and is continuing its bullish trend. A little bit lower. Okay. MACD is the 2 lines indicator, so right here, the signal and the MACD line. When the blue line is over the yellow line, it's bullish. Over here, the blue line is the orange line here, and the yellow line here is the blue line there. So just note that the MACD line on my chart is the orange one, and the signal line is the blue one here. When TTM is light, hold on a second. TTM is it indicates a start of a very big move. When TTM is light blue, we are also in the stage of the greatest momentum. You can see the light blue from late January. Where in the dark blue phase, there is still bullish momentum, but it is dying. When we go to a red phase, we are in a bearish phase. You can see that throughout February. Yellow indicates that bearish momentum is dying. From here, we can see that bearish momentum is dying, and then we are going to go into bullish territory, right? Light blue candles. This is assisted by the fact that MACD is super bullish right now. I did the week chart to give a good overview of the price of GME because it's so volatile day to day that it's hard to understand it sometimes. Finally, Ichimoku. The indicator is a trailing momentum indicator. All that you need to know is that when it crosses through the red cloud, it's an indication of bullish momentum. Would you look at that? GME is ready to enter this red cloud right before earnings. And you guys are likely seeing a couple of you are asking, is it time to be afraid? No, it's a time to take your mouse, move it over and into the live chat and look at how many people are not afraid whatsoever. Look how many people are looking at the earnings report, looking at the fact that this is one of the last opportunities for the hedge funds to pull out their tricks, which we've already talked about: spoofing and layering and short ladder attacks, all of which we have covered in the channel previously. These 3 indicators are great on their own, but when used together, they are even more powerful. MACD indicates that we are bullish right now. Ichimoku and TTM indicate that we are about to go into a period of extreme bullishness. These charts all show that the bullish momentum for GME is just beginning. Okay, so this is the beginning of something big. I'm going to bring Meatball back up here. There you go, buddy. A note about short attacks. As many of you have seen over the past few days, take it slow, buddy. He's got that golden genes. As many of you have seen over the past few days, GME has been through a series of sharp downturns intraday. Are these short attacks, or are they one of our institutional allies purposefully putting us on SSR? It's impossible to know. This will be an examination of those crashes and some potential theories. And we've already talked about how this was integral to Hayes Pixel's end game theory for last week, that there was a friendly whale purposefully putting us on the SSR. Like they said above, it's impossible to know that these short attacks are from friends or from foes. What we can be sure about, however, is that either triggered stop losses and or pushed out paper hands. How can we be sure of this? Below are screenshots of the flash crashes from March, and as you can see, the crash volume candle is about to be equal to that of the recovery candle, but the price does not recover to its previous highs. What this makes me think is of a short attack triggers stop losses and paper hands, then whoever did the short attack, again, friend or foe, brought the shares back up. The reason why the price doesn't fully recover is because of paper hands being pushed out. I believe that the whale probably sells off all of his shares, then rebuys at the lower price, hence the equivalent volume but price not fully recovering. Again, it is impossible to know that this was an actual short attack or if it's an ally trying to put it on the SSR. But what we should know is that there's no way a regular sell-off. No stock drops over 50%. 2 times in 1 month with no news catalyst. That was for Wednesday when we saw that ridiculous 10 levels of support being pushed down of GME. If a stock drops this much, it's usually because of investigation, missed earnings, etc. On both of those crashes, there was no news on GME at all. So do not think for a second that these were instances of just regular sell-offs or profit taking. They were 100% coordinated attacks. So from a level-headed technical trader that mostly only looks at indicators, you've heard it here, this is pure and simple a manipulation. The reason why they made this post is to highlight why paper handing GME is not a good idea through a technical analysis. Obviously, it's a good idea for the cause. It's not a good idea for the cause, but I'm here to show that it's not a good idea for an individual ape as well. If there's one thing to know about GME, it's a volatile stock. This thing can and will move over 100 points in a single day. We have seen the price go from $100 to over $300 in a single day, and from 350 to less than 200 in less than half an hour. It is understandable that many new traders might, for example, get in on GME at $100, watch it rise to 350, panic sell when it goes below 200, but I'm here to give you proof that it is not beneficial to do that. Below, they have posted screenshots of several charts at various time frames since the beginning of January to now. The red circle signifies where you might have been tempted to paper hand, and the green circle signifies why you would have been better off holding. It's important to note that the only way you could have lost money on GME if you bought in above $400, but believe me, apes, we're going to go far above 400 in the near future. The reason why they have posted this is because even though they are feverishly against paper handing, everyone, including myself, gets down and sometimes even panicked because GME crashed, because it makes up so much of their portfolio. They suggest looking at these images every time GME falls as a reminder that this is a long-term game and that volatility is expected, and that paper handing is not the answer. Enjoy. So we have here February rise after so this is the chart here, no x-axis once again, but this is if you dipped here, right, and you were like, I'm so scared, and then you sold, and then you would have been on a terrible basis on the other side, right? And then February rise after the CFO was ousted here, right? You'll be like, oh no, I gotta sell, and then you would go boom on the other side. And then finally the 350 to 172 flash crash, right, when people decided to bend down to the manipulation on Wednesday, and then there you go, you would have been in better shape if you didn't panic. Don't panic. When GME doubled in a day, then corrected to the first squeeze, so you would have dipped down there, you would have been like, oh, that's a lot of loss, and that squeeze would have been just around the corner. So, and then I guess we still have more. The day the GME hit 500 pre-market, then tanked and then recovered, right? There you go. And I think one last one, the post-squeeze lows when everyone thought GME was dead to now. So this was just a long game of those of you who didn't sell and decided to stay. A note about squeezes. How much more is there? Oh, almost done. Note about squeezes. Before I go any further, please understand that the last time was not a short squeeze. Last time was some shorts covering and a series of gamma squeezes. A short squeeze is characterized by rapid increase in both price and volume in a short period of time. A short squeeze is far more violent. Thank you, David Seggs. AMC is not dead. This is where we hold buy if you can. AMC is now dipping below $12 to a brand new low of $11.76. Let's look at GME as well. A short squeeze is characterized by rapid increase in both price and volume in a short amount of time. A short squeeze is far more violent and faster than a gamma squeeze. Short squeezes can cause series of gamma squeezes, and gamma squeezes can cause short squeeze. The reason why a short squeeze is so rapid is because tons of people are buying, which decreases the total number of tradable shares in a float. The buying pressure creates immense price increases, which causes shorts to get margin called, and you have to start buying to cover, which is a backwards, a cyclical cycle. You guys know this already. This short squeeze will force market makers to delta hedge by buying more shares, which is the gamma squeeze. Just know that the squeeze truly didn't happen last time. If it did happen, you would have seen violent uptick in volume and price on a single day or two that was far higher than the $500 high we saw last time. It should look similar to the VW short squeeze. So anytime you see FUD, narrator's voice. The calm before the storm. What happens today? Stick with Andrew Mo and Professor Meeple on Z-Apes to find out. GME Z. To add more to this, if the squeeze truly did happen, then FINRA would be reporting far lower numbers than 50%. Let's be clear. This is why we check in on FINRA every single week, right? This is 100% why, because if the squeeze already happened, there would be no more shorts left in the FINRA report. If your eyes are glued in the Wall Street Bets DD page and your eyes are glued and then you are probably seeing a plethora of posts about the short interest in GME isn't 50% like FINRA says. They've seen 65, 120, 200, even 900%. Let me tell you, those apes put in some good research to get those numbers, and you should definitely listen to what they're saying. They personally believe the SI is over what FINRA is saying because of all this crazy illegal stuff the hedgies are doing with ETFs and naked shorts. The point that they're trying to make is that it's impossible to actually know what these numbers are because of what the hedgies are doing. Again, they want to give props that they are making really good DD. We've already covered some of that DD, especially the ones that go up to 900%. It also, this is a hypothesis, so feel free to disagree with him, but they believe that GME is a stock that reacts so strongly to catalysts because of Wall Street Bets and retail traders essentially owning the float, right? If we were the whale, look at me. I am the whale now. If we really were the whale, then we would be able to say this is exactly where we are here for. So we are looking at the final pieces of the FTD squeeze right here. I would like to reiterate the amazing work that one of the fellow apes did on GME. I don't remember his name, but you've probably seen the manifesto about the FTD squeeze and how FTDs are going to have to be repaid soon, which will lead to an actual squeeze. I don't have the link to it, but I just want to acknowledge that guy to say thank you. Okay, well, thank you. To the FTD squeeze guy. Also, just as another note, if you look at iBorrow Desk, GME has less than 10K shares available to trade for the past few days. Borrow rate is super low, but this is just another interesting thing to look at. Closing thoughts. Eliezer, I'm going to look at your super in a second. In short, I like the stock. If there is anything that you would take away from this, remember, volume is king. The short squeeze has not happened yet. Short interest might not matter, and it's only a matter of time before this thing launches to the moon. Again, this is not financial advice because they're not a financial advisor. They have always loved investing and trading, but making these DDs and hearing your reactions has become one of my favorite things to do, and it's bringing me lots of joy. Thanks a ton, apes. Stay strong. And this is the most important piece to remember, is that if you have taken anything away, is the message of the technical analysis is strong, and the message of the narrative is going to last in history books for a long time. If you like this video, make sure to give it a like so other people can find out. This DD was directly sent to me through my email at andrewmobusiness@gmail.com. Home Depot Hank is a friend of the show. We've read his DD before. He's found his video on YouTube. I pinned his comment. It's a very giving relationship in the YouTube DD Reddit community. So if you have DD and you want to be able to see it on this show, send it to andrewmobusiness@gmail.com. And if you guys have subscribed because you want to be part of the Hive Mind Moon Platoon and learn as much about stonks as you can, that's a great way to go about joining the Moon Platoon. All you need to do is press the join button next to the subscribe button, or check me out on Patreon with the link posted below. For now, but not for forever, see you in space.